Mic check, mic check. What up, everybody? My beautiful people, my fellow traders, how are we doing? John, welcome in. Josh, what's up, what's up? Let's get this week right. Matt, hey, how's it going? Oh, yeah. Just letting some more people join in before we get started, guys. Hang tight. Rick, what's up, man? Okay, let's get started here. Welcome to this week's watch list review with Spartan Trades. My name is Gates. I go by TradeLikeGates in the trading community, and I run an awesome trading Discord server. So speaking of that, I've been getting a lot of messages from my members regarding the live trading, and I want to let you know it has not gone away. I was just taking this previous week off following my move to kind of get settled back in, but that live trading resumes this week. All right, Tuesday and Thursday, we will be live in the arena talking stocks during the morning trading hours. All right, so you don't have to send me any more messages about it. It's not going away. We will be trading live this week, I promise. For those of you who are new here, welcome in. Again, full disclaimer, this is not financial advice. I am not a financial advisor. What I am discussing this afternoon, this is my personal trading plan. The plan being discussed is only in effect if the stock moves the way that I anticipate. Meaning that if the stock goes the other direction, then the play is not setting up the way that I thought it would, and therefore I will not be taking the trade. Okay? After I discuss my game plan, I'm going to open up the floor to those of you who want to call out some stocks, and I'll give you my opinion on those as well. Connor, welcome in. Rashawn, welcome in. Edward, aloha, what's up? Welcome in. If you're ready to get started, press the like button for me, show me some love, and let's go. What I have pulled up here is /ES. This is the daily chart time frame. It's the future that SPY follows. It basically just kind of tells us what the overall market sentiment is. So I have two lines drawn on my chart here that's most relevant to where we're currently trading at. That's kind of the range that ES has been trading in. So we have resistance right around 4180. We have support right around 4100. A couple of times we've broken below that price point, but these candles are closing within this range. So this week, all that I'm really looking for is a break to this break of this range to either side. I'm just looking for a directional move. So whether that's up or whether that's down, I really don't care. This is kind of the two levels that I want to pay attention to. Of course, I am a bullish trader, bullish bias trader. I'd like to see it break out. I'd love to see a lot of stocks that we're watching kind of run. But I'm not going to go into the market this week with a bias. You can't, because you know we're literally range trading here. So for all we know, it could stay within this range. All right, but 4100 and 4180 are two important levels to have alerts set at for /ES this week, and that's all that I really have to say about that. As for our main watch list for tomorrow, the first one that I will be watching is RBLX. This is one that, unfortunately, Well, fortunately and unfortunately, I looked at it on Friday with the. So I run a program every week with different members that want to help me build the watch list or learn how I build the watch list, and this was literally one that we looked at with because it had resistance here at $78. So I'm on the daily chart time frame. A lot of resistance back here, resistance most recently there, and I was like, you know what, this looks good for a pop move up and over if it goes. And I wound up not putting it on the watch list due to the spreads on the option chain, and that wound up being, like, I wouldn't say a mistake, but it was something that I kind of regret not doing rather, because this was a nice move, right? This was a nice breakout move from this pennant pattern that formed here, very large pennant pattern that formed into the all-time highs. So what is fortunate about this move is that we got the higher volume coming in on the breakout of the resistance and the breakout over the all-time highs, which kind of caused the option chain spreads to tighten up a little bit. A lot more eyes, I've noticed in the community, are noticing this move as well. So we're just looking for a continuation play on RBLX over 85 this week. Very easy, very simple analysis. You know, I'm not too worried about if it comes down or if it consolidates. I would obviously love to see that happen because a move like this should not really go parabolic, because as it starts going parabolic, you know, you're like, well, I feel like I'm chasing up here. Do I really want to continue to stay in this trade as it gets overextended? So I would like to see it kind of consolidate and build a base, but I think that this is just now getting this volume here. So it may still have the power and the momentum to continue to run, at least for a little bit. The next logical area of resistance from where we're currently trading at, in my opinion, would be up here near $90. I'm not saying that this makes that move in one day. It's very possible that it could happen, but my profit margin from 85 to the top side is going to be right around 2%. That's going to put us at about $87 there. Okay, and it's very possible for RBLX to make a 2% move in one day. So this is the first one on our main chart watch list for tomorrow. It's a pattern breakout. It's an all-time high play. It's a long idea over 85. Let me move to the 5-minute chart time frame. You could see why 85 is going to be our trigger level. 2 peaks here intraday. Close enough, right? I mean, it's not testing 85 perfectly, but it's close enough. We want to wait on it to break 85 so we get that confirmation. With a price target of 87 in mind, and then above that, probably $90. The second one on the main chart watch list is PLUG. So this one has been beaten up quite a bit. We put it on the watch list to catch the reversal move from this downtrend back up towards the top side. And it hasn't really given us it's given us some directional moves, but it hasn't really given us like a big breakout day. It's given us a couple of gap days, a few inside days, like a slow grinding up. I think that this still has the power to push up to test $30. So this blue line that you see, that's my 200 EMA. And again, I'm on the daily chart time frame. That blue line that you see is the 200 EMA, which has been treated as a resistance previously. So what I see here is a range being built with resistance at $28. Yes, it has had a couple of peaks over 28, but where these candles are closing are all below that $28 level of resistance. Support's going to be right around $26. So what I'm looking for tomorrow, let me move to the 5-minute chart time frame, is a break over not 28, because I want to have that extra confirmation, but a break over 28.5 for the run up to $30. I don't know that if it gets there in one day. Again, it's certainly possible. But the same thing on RBLX is kind of the same thing that I'm looking for here. So just a profit target of a 2%. I'm just looking for a 2% move in mind. So that's going to bring us right at about $29 or so. Pretty close to $29. I know, you're thinking, well, it's only like, what, a 50-cent move there. That's all you need if you're trading the weekly options contracts. So a break over 28.5, price target about 29 or so, maybe a little over. The best case scenario is that we get that momentum to come back into the stock like we saw here and like we saw on this gap up day, where it runs and just pushes right up to test that $30 level of resistance. The third one on the main chart watch list is SPCE. So this is a recent up gapper play. You see the previous candle had closed down here, and then the wick pushed down to fill that gap partially there. So I like to highlight my gaps with a gray shaded box. You're going to see that all over my charts, right? It's just for quick identification, so I know where the gap areas are at. So it gapped up. That's going to be your support point right at around $19 or so. Obviously, the resistance is up here near 22, and above that, I think there's potential for this to run up to 24. That's going to bring us right up to the previous peak, as well as just below the 50 EMA. That's that green dotted line right there. This had gapped up. There's a catalyst behind it, right? That's the reason why it gapped up, and you see this kind of volume coming in. There is the test launch news. So I like this play because it's really been beat up, right? Look at the support down here at $14 or so. Well, 14.5. Very strong support point, and then the major run up to 62, and it retraced all the way down from the highs at around 62 down to that 14.5 support, and we are just now starting to get a little bit of relief from this selling pressure. So this was a very good spot down here for it to bounce at, kind of a very logical spot for it to bounce at and continue up, right? So we're looking for a break over $22. I think, let me move to the 5-minute. Yeah, 22 is going to be the safer entry. So we're looking for a break over 22 with a price target of 23 or 24 in mind from where it's currently trading at. If this winds up gapping up like close to $24, it's going to put us in a very interesting spot for this stock, because then it would be trading just below the resistance point with a double gap up, and you have to start considering the risk to reward at that point. Can it really continue up from there, or does it make more sense for it to reject at the resistance and pull back to fill the gap? I guess what I'm getting at is that these levels that I'm giving you now, they are subject to change in the morning, especially if you have crazy overnight moves such as gap ups and gap downs. So don't think that just because I'm saying this looks good for a long over 22 and it gaps up to 24 that it's good to take it long at the open, right? That's not necessarily the case. The trigger levels that I give, they're just kind of used for guidance points or reference points, and those change in the morning following the move. So make sure that if you're writing or taking notes, that you're adjusting these trigger levels according to the pre-market moves. Always trade with pre-market data on. It's important stuff. All right, the last one on the main chart watch list, this is probably my favorite setup of the week, is Boeing, BA. Another up gapper play where it had gapped up from like 228.5 up to 233, and then had pulled back a little bit to 231. Anyways, there's your gap area right there. We have a few things going on. For one, it gapped up on the daily. And the reason why it gapped up is because there's a news catalyst, right? There's the news about the 737 output. I feel like Boeing kind of always has news, so you have to take it with a grain of salt. But this gap up looks really good because it's occurring right as this is bouncing off of the 200 EMA, which is always a potential area of support, especially on the daily chart time frame. So what I see here is almost like a double bottom pattern, where it's gapped up and then confirmed the neckline break of that double bottom, right? And a double bottom forming at support, this is a potential reversal pattern. So with this reversing off of the 200 EMA, which we already have identified as support, and gapping up with a news catalyst, this looks great for a continuation play, because not only is it breaking the resistance where it was trading at like $230, right? This was our range for last week, between 220 and 230. So not only is it breaking that resistance, but it's also breaking the resistance of this 50 EMA, and you could argue that it's breaking that downward trend line resistance. So a lot of things kind of going on right here. A lot of reasons why this looks good for a continuation play. I wouldn't feel comfortable taking a long position on this until we get that confirmation that it's breaking over $236. You see the intraday resistance, right? Tested once, tested twice, pulled back. If we get a break of 236, I think my first profit target will be right around $240. That's just kind of basing that level off of where this peak was on this initial rally up. So there's your resistance, pulled back, broke over, and then tested as support, right? And then a couple of times here, you could argue that that was also a resistance. So over 236, your next logical point of resistance is going to be right at around 240. Above that, 245, and then up to 250. Okay, this is definitely, Boeing is definitely, well, as of right now, my top watch going into tomorrow. So a quick recap, I like RBLX over the all-time highs. That's a continuation pattern, or a continuation play following the pattern breakout with a long idea over 85. I like PLUG. With, it has resistance right there at $28, so we're looking for that extra confirmation, long idea over 28.30 or 28.50 rather, with a price target of 30 in mind. I like the setup on SPCE. That's going to be an up gapper on the test launch news, and I really like the setup here on Boeing. I do have some side charts, so don't leave the stream just yet. I'm going to talk about some side charts and give you some levels to watch on these stocks for the rest of the week. The reason why they're side charts is because they're not quite set up yet, but they are something to watch because there could be a setup here later on in the week. Really, I think it's going to depend on the market direction. But while I'm talking about these side charts, please feel free to post up in the chat section anything that you want me to review. I just ask that you don't mention any penny stocks. I don't really like doing analysis on those. And then I also ask that you don't just call out random stocks. If you do, I'm probably just going to skip it. So send me a stock and then a sentence or two explaining why you think it has potential, and then maybe like, a resistance point or a support point. I don't really care if you're right. I just care that you try. It makes for better conversation, right? And it also helps me and others understand what you're trying to point out and what you see on the stock. Okay, so for side charts, I have six. One, two, three, four, five. I have six of them. DKNG. First one on the side chart watch list. Just another one that's kind of really been beaten up here. Range trading at the lows, the recent lows, with general support around $42 and general resistance around $45 to $46. So what I've done is set an alert over 46, but in reality, none of these daily candles are closing over 45. So there's a couple of ways to trade this. If you want to set alerts at 45, you could and take a trade over 45 up to 46. Or you could be like me and just wait for the break of $46. That's going to kind of give you that extra confirmation. Keep in mind that there's a gap area just overhead. It's minor, but it's there, right at around 47.6. So that's going to be your resistance point from $46. That's going to be your next logical area of resistance. Then above that, you probably have resistance right at around $50. That's going to be below the 200 EMA and the whole number, right? $50 is a nice round whole number. So for DKNG, it's a side chart because it's not breaking out at all. In fact, it's coming down. But it looks like this selling pressure might be a little bit overdone. and this may need to relieve some of that selling pressure with a little bit of a rally. I'm not saying that the trend is reversing. I'm not saying that this is a good stock to buy and hold long term or anything like that. I'm just mentioning that if there is a break of this range here, there is a potential play over 46, probably up to 47.5 or so. All right, so my alerts on this play are set at 46, and I don't care what it does underneath that, but I will be ready to take a trade on it if it breaks above that. The second one is Facebook, number 2. I'm only including this one because it's clearly on an uptrend, and it's treating, let me delete this line here. It's treating this 50 EMA as a support on the way up. So you see a bounce there, you see a bounce here, and then a red day on Friday, which is not surprising because SPY had a red day, so like a lot of the FANG stocks just kind of came down with that. But somebody in my server was mentioning Facebook over $320 on Friday, and I agree. I think that Facebook does look good for a move over 320, but you're probably going to want market backing. So the only reason why I'm mentioning Facebook right now, in all honesty, is because if SPY decides to recover from where it's at and kind of break out of this range that it's in, right? Remember the ES resistance was at 41.80. So if ES breaks this resistance and we see a big green day back up towards these highs, well then it's likely that some of the FANG stocks will follow suit, if not all of them will follow suit. And you might see a bigger bullish day, bigger breakout day, kind of following that overall market sentiment. So keep your alerts on Facebook set at 320. And if you're trading this, just consider having market backing behind your position. Number 3 on the side chart watch list is AAL. It's a side chart because it's pulling back. I mean, it is red right now. We were watching this for like the longest time for a break over $22, and we finally got that move. And this was like beautiful, right, when that happened. And then so now it's like met resistance at 24 and is pulled back. But what this is starting to look like to me is a bull flag pattern, where this old level of resistance at 22 may be validating as new support, right? Old resistance validating as new support, forming a bull flag pattern. It's a side chart because it's still shaping up, right? This could easily just continue to pull back and fall back within this range. So you would want to see from here, there are a couple of conditions that need to be met. From here, 22 I think absolutely needs to validate as a support. It should not break below 22 for this bull flag to remain a bull flag. And then the second condition that's met or needs to be met is that it needs to stop making lower highs and start to make higher highs. So the moment that we get a break of $23 at this point, the moment that we get a break of $23, there is potential for this to possibly be breaking out to the top side and pushing back up towards this level of resistance. So of course your first level of resistance will be 24, and then above that it's going to be right around this peak, 24.5 or so. But side chart watch because it's only pulling back now. We don't have confirmation that it's breaking out, so just set your alerts at 23. Come back to it whenever that level's broken. Twitter, TWTR, we've had this on the watch list a few times last week. We caught the nice recovery move following this downtrend break, popped over the 200 EMA, unfortunately was unable to sustain those gains, but it did push right back up. So what we have here, and by the way, if you're just looking at the daily chart, I mean, you see that big gap overhead. What we have here is a possible, it's called like a dead cat bounce play, where the sell-off happened and it was kind of overdone, and the stock may still need some relief from the selling pressure. So we're looking for a larger move over this resistance at around 55.5 for the run back up to the bottom side of the gap area, just below 58. So we're just going to say 57.5. All right. I don't expect it to push up into the gap and fill the gap, so this is not a gap play for me. The only thing that I'm looking for is for it to break this kind of area of resistance that it's currently trading under and start to get back into recovery mode, because it is over the 200 EMA. And so when you're using the daily chart time frame and you're using these indicators, you know, a stock trading over the 200 EMA is still considered to be in an uptrend. So when it gets extended off this 200, what does it like to do? It pulls back, right? Extended off to 200, pulled back to test. Extended off to 200, pulled back to test. Well, here it got really extended, and what's it doing? Pulling back to test. I mean, there was a little bit of a catalyst there, being the earnings report. Nonetheless, it's right here at this price point. So if we get a break of 55.5, we have a couple of things. We have a confirmation that the 200 EMA is trying to validate as support. And then two, we have a little bit of relief from that selling pressure and possibly a trend break, especially if it gets over 58. But one step at a time. A break over 55.5 looks solid. That should put it on your radar. Two more. One of them is Uber. Kind of the same deal. Earnings drop and it's recovering right at the 200 EMA. So the setup really reminds me of Twitter. But it has very clear line of resistance here at $50, which happens to be a whole number and also happens to be the bottom side of a gap. So $50 is a fairly significant level. This gap isn't very significant though, so I don't know that I would consider this a gap play because, well, I mean, it's very small, right? The profit margin, it's already partially filled, so the profit margin there is like 0.5%. Yeah, it's less than 1%, so I wouldn't even consider this a gap play, but it is there, and it is worth noting. So from here, I don't care what it does. I just want to know if it's getting over 50, if it can break over $50 and hold. So set alerts at 50. We'll come back to this trade or come back to this stock if it decides to break. The last one is Tesla. All that I'm looking for on this stock is for it to break over 600 and start to push back up. It's a very almost similar setup to the other ones that we mentioned. We have this sell-off to the 200 EMA, trying to find some support down here, and we're just looking for a little bit of a recovery move. So set alerts on Tesla at 600. All right, that's all that I have for you. So real quick review on the side charts. That's DKNG over 46, Facebook over 320, AAL over 23, Twitter over 55.5, Uber over 50, and then Tesla over 600. If you tuned in late, you've already missed the main chart watch list. This stream is going to be up and still available for you to view for the next 24 hours on my YouTube channel. So don't freak out. As soon as I end the stream, it should be uploaded for you, so you can just restart the stream and catch it from the beginning. All right, let's go over some side charts that you guys have all been mentioning, or some stocks that you all have been mentioning, and see what is up. What do you guys have on radar here? Yeah, I really like that setup on Boeing. I think that's well, I mean, easily it's my favorite setup right now going into tomorrow's session. At least, you know, if not for the week, at least for tomorrow's session. I'm just hoping that it doesn't gap up too much without us, if it gaps up at all. All right, John is mentioning Dash. Let's talk about Dash. Oh yeah, that's a nice setup right there. Look at that. So you said building a bull pennant on the daily after earnings, has a gap below, but I'm thinking you break out over 140. Yeah, this is a really beautiful setup right here. There's not a lot of price action for us to go off of, right? Because it's, I mean, a fairly new ticker. So all that we have to go off of, as a matter of fact, is just this data that we see here. So what I'm going to do is draw a trend line from this dip, connecting this breakdown, this resistance, this support, and then this resistance. I mean, that is a clean line if I've ever seen one. Then you have the low, gapping up following earnings, forming a bull pennant, a lot of consolidation here, a lot of chop. There's your pennant pattern underneath a major area of resistance. I like it over 140. I think maybe you should be a little cautious about that 50 EMA being overhead, so maybe set an alert at like 142.5. But look, if you get that higher volume day and there's conviction in the move, this is solid. This looks good over 140. Just be careful, that you're not setting your trigger level too close to where it's currently trading at. So you're going to want to watch, if there's volume flowing in on that break of 140, then you may truly have a bull pennant breakout. Yeah, this looks great though. I like that a lot. What are I'm looking at the contracts. I want to see what these look like. Okay, so the open interest isn't very high, and they're a little spready. I guess they're not terrible. They're doable. Yeah, I don't know about from like a day trading options perspective if this is like if that option chain is very ideal. So just be cautious about that too if you're trading. But if you're just trading the stock, like if you're just buying the shares and selling the shares, yeah, sure, go for it. Cool, great setup. That's really clean. I'm glad that you brought that up. ST is saying Alibaba, you're looking for a break below 210 to short it. Alibaba is like, it's tough to get a grasp on it. I mean, here it was fine because it was like clearly in an uptrend. I guess here it's clearly in a downtrend, but like most recently, let me move to the 5-minute chart. Most recently, you see, maybe I have to move to the, I'm gonna move to the 30-minute. Okay, so like it's gapping up and down like crazy, right? Gap down, recovery. Gapped up, move down. And then gap down, gapped up, gapped up, gapped up, gapped down, right? So it's like all over the place. It's very hard for me to get a read on Alibaba. We actually liked it over 215 for this gap fill, and it like totally just, it filled half of it and just rejected and came right back down. So if you're looking at a short below 210, I would agree. I think I would agree with that. It does kind of look weak. The only thing is like it's just hard to get a read on it where it's going from here. It's very, very choppy and gap up and gap down. But yeah, your support's going to be like around 206, 205, and then below that, look for support at 200. You're on the right path though with if you're thinking puts, because like clearly this is in a downtrend at the moment. Just based, like I'm taking into account like all of this price action. One tip for you guys that are like new to charting or new to analysis, if you're looking to day trade something, to increase your chances of being on the correct side of the trade, you typically want to trade in the direction that the stock is already moving on the daily chart time frame, because what you can wind up doing is not getting the best intraday entry, but still being profitable on the trade like later on in the day, right? So for example, let's say that you see the stock is moving up here on the daily, and it has been moving up the whole time, and so like, this trend is most recently up, so you're just gonna buy it on this day, but you enter like a little bit, maybe like halfway through the day, and then the stock comes down a little bit. Well, because it's already in an uptrend on the daily, there's more of a chance that it continues that uptrend on the daily. So your intraday entry may not matter as much, right? And so basically you're trading with the overall trend, which increases your probability of being profitable. Whereas if you're trying to buy the stock and go long on a downtrend on the daily, well, it's coming down, so why are you trying to trade against the trend? I know it sounds counterintuitive, but there are things that you should look for regarding reversals. And I know I added a couple of stocks on our watch list that are currently in a downtrend. For example, Boeing, right? But how many reasons did I give you here for the reversal happening? You got the news catalyst. You've got the gap up. You've got the double bottom. You've got the 200 EMA support hold. You've got the downward trend line break. You've got the 50 EMA reclaim. So like all of those are reasons why the stock is potentially reversing. So yeah, I'm glad that you're on the right path here. Like if it's coming down, just try to trade with the overall trend. Maybe consider shorting it. If it's going up, trade with the overall trend and look to take it long. Facebook over 320. Yeah, we talked about that one already, Jack. PLTR. Ryan says PLTR is beginning an upward reversal after a huge volume spike in the $20 range. I like PLTR. I just don't know if it's truly ready to reverse. The big volume spike, by the way, was that's your earnings report, right? So it's weird because you had this awesome move following earnings, which was a bullish engulfing candlestick, which does signal a potential reversal, but then it was followed by 2 days of downward movement, which was quickly reversed for the run back up. So what it has done is reclaimed the 200 EMA, and it's like, well, what does it do from here? So I wouldn't say that this is ranging, because with a range, you have a very clear line of resistance, you have a very clear line of support. This support and resistance is kind of all over the place, right? So I wouldn't say that this is ranging. I would say that it's more consolidating, and if anything, it might be the beginning of like some sort of pennant pattern. So I have alerts set. You see my alerts here on the side. I have alerts set at 21.5 because Ryan, I agree with you. I think that this could be the start of an upward reversal, but for me, it needs to confirm this bounce off this 200 EMA, and I need to see a higher high. So I want to see it breaking 21.5 before I take a position on this. It does have room, and I don't mind waiting because percentage-wise, like it does have room up to that 50 EMA, and we're still looking at a 4.2% profit margin right there, and that's plenty enough to take a trade on. So I have no problem waiting for confirmation. I just have two alerts set, one right above 20 and the other one right at 21.5, and we'll see where it goes from here. Gabriel said VIPS reversal plus a gap fill. I've never even heard of this. Let's see, VIPS. I've never charted this before. Okay, so big fall, push up, big fall, and so this, let's talk about this being a range versus what we just saw being a range, right? This is a very clear line of support, very clear line of resistance. And then same here, you have very clear line of resistance at 23, very clear line of support around 21.5. So these both are ranges, and then you have a gap area just overhead. It's kind of small, but it is there, right? So gap area overhead, range. Whereas PLTR is not, you don't have a range here because you don't have that clear support and resistance. These are kind of all over. It's making higher highs, it's making higher lows, it's making lower highs. It's like, oh, well, maybe it's just a pennant pattern, But yeah, let's talk about VIPS. You said it's a reversal plus a gap fill above 23 year long. Yeah. Okay. So it sounds like to me, because you said you already have a position, it sounds like to me that you're swing trading this rather than day trading it. So from a day trading perspective, I would agree. I would say that above 23, it does look good for a long position because there is that gap overhead, right? With a move up to 23.5, which I said earlier was not super significant, but sometimes I forget that a 50-cent move on a stock like this is 2%. Yeah, you're right at 2%. So the profit margin is there on VIPS for the gap fill to the top side. However, This is clearly in a downtrend, right? And what scares me is that it's breaking this 200 EMA. So like a stock trading over the 200 EMA is clearly in an uptrend, whereas a stock trading below the 200 EMA is in a downtrend. So what you may have, if you get that reversal, is a trend line break, yes, but you may see something like this where it pushes up to that 200 EMA and then rejects and comes back down. So just be careful if you're holding this for a longer period of time, because I mean it is clearly in a downtrend, and as a swing trader, yeah, no, I don't know if you're like a long-term holder or a swing trader or what, but you just got to be cautious because it is moving down at the current moment. But if we're talking about just a day trade, yeah, right over 23 to 23.5, sure, it looks fine. All right, Kevin said you see a lot of the growth stocks bear flagging on the daily. Yeah, I mean that's a sign of rotation, right? So you have like sector rotations are a real thing. It's just like whenever that whole kind of I think the Wall Street bets thing, to be honest, with GameStop was like the start of the downtrend actually of a lot of those stocks. If not, it was like right around that same time frame. But yeah, you're gonna see a lot of them kind of moving the same way. John said Amazon and Apple rejected on the 50 EMA on Friday. Do I see this as a sign for the market to come down or just a one-day deviation from the trend? It's tough to say because you have like this. All right, so you have like this downward push, rally, down, right? And the most recent day was down. Right, so then Apple, downward push, rally, down, rally, and then a red day. You're going to see the same with Microsoft, right? Down, rally, red day. And then if we're looking at SPY, well, you know, down, rally, red day. But if you look at ES, like this kind of makes it a little more clearer for you. It's trading at the top side of this range. So I don't want to speculate, John, on where we go from here. It's tough to say. My belief is that if we break 4180, you're going to see a lot of that red day that we see on Amazon, Apple, and you know, Netflix, all the FANG stocks reverse and push up with SPY, or as SPY recovers. So it's just, I think it's going to depend. Right now, it's tough. I don't know, to be honest. This to me looks like a double bottom pattern. Like that's your bottom. There's your neckline. There's your bottom, and we won't have confirmation until we break this neckline, right? And once we break that neckline, that resistance there, then we'll know. I know that's not the answer that you're looking for, but I mean, it's just tough to say. I don't want to ever try to like speculate where the future of the market, especially like in such a short amount of time, is going to go. Given that futures are green, though, it may just be a one day deviation. All right, let's do 3 more. All right, so Kevin's saying Snow 240 break to the top side. Sure, but I want to point something out to you. Snow also has earnings coming up, right? So that means that whatever technical analysis that we do on this stock, it's probably not going to matter when that earnings report comes out. So any analysis, like I just try to not waste my time on something that, because fundamentals will always take precedence over technicals. And so the fundamentals being, you know, the news report, I don't want to sit here and like overanalyze Snow and say, yeah, it looks good for a position over this point when earnings are right around the corner. But you're right. If earnings wasn't here, the 240 line, I mean, you see it. I have the line drawn right there. I have an alert set right there. That is a level of resistance. If earnings wasn't the case this week, I still wouldn't take this long over 240, especially if we got the move tomorrow. And here's why. This move up has not had a single red day really. I mean, it's retraced a little bit, but it hasn't had a single printed red day where it's gotten some relief from this rally back up. So you're looking at percentage-wise, a 20% move on the stock without any sort of retracement. And after a 20% rally to the top side, does it logically make sense that we break this price point on the first go round and continue up? Probably not, right? So it would push up. Maybe you get a little bounce over, but it's more likely that it would reject, or even maybe not reject that hard, but even just like consolidate a little bit underneath and then decide to go. But that's not the case or scenario that we're working with, because earnings is coming up. So I think it's really going to depend on whatever is put out here, if this decides to break 240 or not. I really wouldn't be surprised to see this just consolidate and move sideways for the rest of the week. We already talked about AAL earlier. Yeah, it definitely looks like a bull flag on the daily. So just make sure you re-watch the stream, the live stream, and I discussed that one. Rabbit is talking about Target. Let's go over Target TGT. This is an all-time high, which is a type of setup that I like to look for whenever I'm trading. However, much like snow, this is pushed up and extended quite a bit off of these I won't say lows, but off of where it started this rally. And I would expect to see some sort of retracement or consolidation before it continues up. So yeah, you could take it long over 227 because you're like, oh, the momentum's still there. It's still making new highs. Sure, that's an idea. But you need to start really considering the risk to reward, right? Because at some point, this momentum slows down and the stock decides to reverse or consolidate. And the last thing that you want to do is be a part of or be in a position when this stock starts to consolidate or come down. So just for reference, this is an 8% move, right? Does Target typically make 8% moves and then retrace? Well, let's see. Right, there's your 8% move, consolidation. Here's about an 8% move, a little bit of retracement. Here is about an 8% move, consolidation. This one consolidated twice within an 8% range, right? So it pushed up, consolidated, pushed up, consolidated, pushed up, consolidated. So you get the idea. And then even if we're comparing right here, it didn't even get that high. So from where we're at right now, you just got to start thinking about, yeah, it's an all-time high play, but is it starting to get overextended? Just something to keep in mind. But hey, look, if the momentum's there, it's there. I'm just presenting you different scenarios. All right, let's do one more. If I didn't get to your stock, I apologize. You can always shoot me a direct message, and I'll answer that direct message. Let's go over, somebody's mentioning Ford, I see, so let's do that. Nice. Okay, so this is, I'm going to go to the weekly chart and back this time frame up to max available, because what I'm trying to do is identify where is the resistance at on this weekly chart relevant to where we're currently trading at, and that's going to be at $14. Then above that, I want to see where's the next level of resistance. That's going to be at $16. Okay, so we've got that identified. Now let's go back into the daily chart time frame. If you're not familiar with a stock that you're analyzing, it's always important to check that max available weekly chart time frame, because it makes a difference if you think you're looking at all-time highs here and you're actually not. You know what I mean? So from where this is currently trading at, like, hey, I think the entry was down here somewhere, but now you have extra confirmation. This looks solid. This looks really good. I think that it probably rejects at 14 and consolidates a little bit, but this is clearly on an uptrend. So you have a couple of things here. It is trading over the 200 EMA, so that looks good. It is trading over the 50 EMA, so that looks good. This is like a big bull flag right here on the daily chart that just broke out. That looks good. The only concerning thing is that you have resistance at $14 and it's trading just under the peak on the daily chart time frame. So there is some close resistance, but I think that this looks solid for a continuation play up. I don't know that I would day trade something like this. Maybe if it broke 14, but Ford's like one of those, it's more of like a, I guess, buy and hold long-term type of stock. Okay, thank you everybody for your time. If I didn't get to your stock, again, I apologize. Just shoot me a message if you really want my breakdown and analysis on it, and I'll get to it whenever I can. I will see you all, at least those of you that are in my Discord server, I'll see you all bright and early in the morning. We are not live trading tomorrow. We will be live trading Tuesday and Thursday. If you're not a part of the Discord server and you want to join, there is a link in the description. So click that link. Come try us out. I do have a trial period, and I hope to make you some money during the trial period if that's the route that you decide to go. All right. Again, thank you for your time. Take care. I will see you all tomorrow. Let's make some money.